The American economy is expected to grow in 2025. Experts predict a GDP growth rate of 2.4%. This growth will likely slow down to 1.7% in 2026. Several factors will drive this growth. Consumer spending is a major factor. Wages are increasing faster than inflation. This gives consumers more money to spend. Business investment is another driver. Companies are investing in machinery and equipment. This will increase their production capacity. Productivity gains also play a crucial role. Productivity has been rising in recent years. This trend is expected to continue in 2025. These gains will come from various sources, including technology adoption. The labor market is experiencing significant shifts. A worker shortage is putting pressure on businesses. This shortage is due to several factors. The aging population is one factor. Declining birth rates also contribute to the shortage. Lower labor force participation is another factor. As a result of this shortage, wages are rising. Workers are in high demand. They can command higher salaries. This wage growth is contributing to consumer spending. However, it also poses challenges for businesses struggling to manage labor costs. Artificial intelligence, or AI, is emerging as a transformative force in the economy. AI is expected to boost productivity significantly in 2025. Businesses are increasingly integrating AI into their operations. This allows them to automate tasks and improve efficiency. Inflation remains a concern for the U.S. economy. While inflation has fallen recently, it is projected to rise again in 2025. This increase is partly attributed to tariffs. Despite this, inflation is expected to remain above 2%. Consumer spending remains strong, driven by wage growth. Real consumer spending is projected to grow by 2.4% in 2025. Spending on durable goods such as cars and appliances is expected to be particularly strong. The housing market is poised for a recovery. After a period of decline, housing starts and permits are expected to increase in 2025. This recovery is driven by low interest rates and pent-up demand. House prices are also projected to rise. Trade policies are significantly impacting the U.S. economy. New tariffs have been imposed on goods from some countries. This has increased costs for businesses and consumers. The tariffs have also created uncertainty in the global trading system. Fiscal policy is another important factor. The government is expected to cut spending in 2025. These cuts will likely impact various areas, including healthcare and education. The deficit is projected to rise before falling again. Looking ahead, there are both positive and negative scenarios for the U.S. economy. A positive scenario would see tax cuts and deregulation boosting growth. A negative scenario could involve aggressive tariffs and spending cuts leading to slower growth. The future of the U.S. economy remains uncertain. However, by understanding the key trends and challenges, policymakers and businesses can make informed decisions to navigate the coming years.